Hello friends, a very warm welcome to my channel. In this video, we are going to analyze Zensar Technologies, which is appearing to be a turnaround story. So we are going to see the company's performance in the past, in the present, and we are trying to judge whether the company can really turn around its business under the new leadership. So if you are new to the channel, please do subscribe and hit the bell icon so that you get updates on all the new videos of analysis which I upload. And if you are not following me on different social media handle, do that as well. Don't forget to join my Telegram channel where I post daily stock market analysis and lots of news and views. So let's get started. So Zensar Technologies is a RPG group company. RPG Goenka Group is a very well-known business house in India. This company is into technology consulting and service providing. They have more than 10,000 people working with them across 33 global locations, and they have more than 130 clients which they serve as on date. So this company is into conceptualizing right from the idea stage till the implementation and maintenance. They do all kinds of service offerings to their clients. They are into conceptualizing, understanding the client's requirements, designing the software product as per the client's requirements, engineering and implementing that product in the client's place, maintaining and managing their digital presence, as well as providing them with extraordinary user experiences. So they serve various business verticals like high-tech, manufacturing, banking and financial services, insurance, consumer services. So they are well diversified across different industries. Let's talk about the management of the company. The non-executive director and chairman is Mr. Harshvi Goenka, who's again a well-known veteran in the industry. He's one of India's prominent industrialists with more than 30 years of experience with the RP Goenka Group. This group is into various lines of businesses like infrastructure, tires, and specialty businesses. Recently, the company has changed the leadership and management. The most prominent roles of the leadership have changed, and Mr. Ajay S. Bhutoria has joined the company in Jan 2021. So he's the CEO and managing director of the company since Jan 2021, and he has more than 30 years of experience in technology sector. He has held various prominent positions in the industries in well-known companies, like he's been a chief executive of L&T Next. He's spent 17 years at Cognizant. He has headed the TCS division in Netherlands. By qualification, he has a deadly combination of finance and technology. He's a chartered accountant, as well as he's a programmer, analyst, and a solution architect. So he's the right fit as the new leadership of this company for taking it to the next level. Let's talk about the history of the company in brief. In 1991, there was a British company called ICIM, which was into manufacturing of hardware computers. They set up a subsidiary for software services, which was later renamed in 2000 as Zensar. From 2000 to 2005, the 5 years they focused on application services and management. In 2012, the company had crossed 10,000 employees and was serving more than 400 clients. In 2015, a PE investor called Apex Portfolio Company took a stake in the company. And by 2018, the company had set up offices globally in more than 20 plus countries. In 2019, they were awarded several awards for their excellence in service. And in 2021, the management leadership had changed and Mr. Ajay Bhutoria took over as the CEO along with various other prominent leaders in various positions. Now we will not discuss the other leaders individually, as it will take a lot of time to discuss everybody's profile, but you can understand that there is a complete revamp in the leadership positions in the company, as well as the lower level talents have been aggressively hired, trained, as well as retained. Now let's understand the business of the company. They have different service verticals, which is experience services, advanced engineering services, data engineering analytics, application services, and foundation services. Now let's talk about these different verticals in detail. Under the experience services, they are more to do with the experience of the people using the different products of their clients. So they do the research and design in such a manner the client has an excellent user experience while using the products. They're also into engineering and implementation of various digital products for their clients, as well as they improve the scalability of the products which the clients have already implemented. They are also into the branding side, so they do technology-oriented branding, marketing, as well as content and various campaigns for their clients. Coming to their advanced engineering service lines, they develop the digital products for their clients right from scratch by using latest methods and tools. They also modernize and revamp their existing products which the client has already implemented, and they also provide them various services like cloud migration and add-on features to their existing products. Under the data engineering and analytics division, now data analytics is to do with collection of data which the client possesses and giving them useful insights about their businesses so that the client takes such decisions which help in the growth and efficiency of the company. So they provide advanced insights for critical decision making for their clients. To do this, they use advanced technologies like artificial intelligence and machine learning. They also try to automate different processes at their client's place to improve the efficiency and productivity of their clients. Under the application services, this is more to do with the applications which the client uses in day-to-day operations. So they do consulting for the client to understand what kind of application portfolio does the client need to remove the inefficient applications and add more useful applications to their clients. Along with the consulting, they also provide support and maintenance for their existing applications, and they also implement apps like SAP, Oracle, Salesforce as per the client's requirements. Along with implementation, they also provide testing solutions for their clients so that if there are any bugs, those are removed and the application runs smoothly. Along with the application services, they also provide foundation services. Now, in foundation services, what are the verticals covered? They help their clients to migrate to the clouds. So, they could be a pure cloud-based service or a hybrid service where the client wants both local as well as cloud infrastructure. They modernize the data centers of their clients. They provide work from home kind of an implementation where the people can work completely remotely or in a hybrid model, which is the need of the hour. They also provide data security, which is becoming very important these days. So these are the different services which they provide at a broad level. Now let's understand how is the share of revenue from different verticals. From core infrastructure services, they get about 5.9%, close to 6% of their revenue. From cloud, digital and next generation CIS, they get about 11.7%. From core application services, they get about 22% of their revenue. And from digital services, interestingly, they get about 60% of their revenue. Now, an IT company which is working into digital services is given more prominence and more valuation these days, as these services are considered to be more margin accretive and more faster growing than the other traditional IT services. If we divide as per industry, they earn about 6% from emerging tech, 14.1% from banking, about 17% from insurance, consumer services about 16%, manufacturing about 10%, and high tech, which is about 37%. So this is industry-wide services. As per geography, if you see, they earn about 71% of their revenue from US, 18% from Europe, Africa about 11%. There are certain companies in India which generate more than 90% of their revenue from US, which I sometimes don't like, because over dependency of the entire revenue from a single country could be dangerous. If something like a geopolitical issue happens in that particular country and your revenue is not at all diversified, then you could be drastically affected in terms of revenue for the next few years till that issue is resolved. By project type, if you see, they have time and material contracts of about 40% and 60% from fixed price contracts. Now let's see the clients concentration. From the top 5 clients, the company earns about 34%, and top 10 clients, they earn about 47%, and top 20 clients, they earn about 60%. So the revenue is slightly concentrated, but there does not appear to be any major risk in the client concentration. So after understanding the company's business, now let's talk about the industry growth and potential. As you know, the IT industry is one of the fastest growing industry in the world presently. There's a new trend happening where earlier the companies used to consider expenditure in IT as a capex expenditure, but now as every company has no option but to get digital, the expenditure is considered to be a operating expenditure, and IT service has become like an essential service these days. All the companies are trying to get faster digital post COVID. Incrementally, in the next 5 years, this industry is expected to witness an incremental revenue of about $1 trillion, which is massive, and this could generate a lot of tailwinds for all the companies working in this industry, irrespective of their size and the type of service they render. So their market has huge potential. While the industry moves towards this kind of a growth, there are various themes which will play, which we are expecting in the next few years. Like, the companies will have to offer services to their clients through an omni-channel service, which is not just physical but as well as digital. People have to have zero-touch operations in situations like COVID. People will have to digitize their workplaces and provide their employees complete automation tools so that they can work from anywhere. And the companies and not anymore can work with offline kind of an infrastructure. They have to migrate to the cloud infrastructure, which is remote as well as scalable and agile. Who are the competitors of this company? Companies like mid-size IT companies, which are Coforge, Happiest Minds, Birlasoft, Intellect Design, Cyient, Mastech and Latent View. These are few of the competitors of this company. So the competition is going to be intense, and the company has to put in a lot of efforts in client mining to get deal wins. What is the competitive edge of this company? I did not find a very strong moat while studying the company, but the company has slight advantages when compared to the other similar size of companies or the new upcoming growing companies in their industry, which could be the company has a very strong parentage, which is the RP Goenka Group, which is a well-known group, which may help the company to get some reliable business. The company has changed their leadership team, so the new team which has come in is bringing a lot of experience and expertise which will help the company to grow faster. They have totally redesigned their identity, their branding, as well as their strategy, and they are going more aggressive than before in acquiring more and more business. They are focusing on new technologies which are drone and gaming, which could be a differentiating factor if the company becomes successful, as all the old and new companies will be competing equally in the newer technologies which are coming in. So for such companies to grow faster and compete with the old companies, if they focus on the emerging technologies, it can be a game changer. The company has global presence already. They have a huge team. So it is in a stable position to scale up their existing business. And liquidity wise also, the company is quite stable, as we'll understand from the financials going further. Let's talk about the growth outlook which the management is giving for the near future. The management says that since the leadership has changed, the company is poised for a new leg of growth, and they have completely changed their branding and strategy, and they are targeting faster as well as larger growth for the coming years. Although the management refrains to give any quantitative targets as of now, but they are quite positive about their business in the coming years. They will focus on improving their margins. As compared to the other IT companies, the margins of this company are leaner. They will focus on getting their data days further down, so they get their money faster from their clients. They are open to inorganic acquisitions. In fact, in the recent years, they've already done one acquisition, and they are open to further acquisitions, and they have enough cash on their balance sheet to do smaller acquisitions already. They will focus on hiring better employees, retaining them and training them, and they have already developed good infrastructure to do the same. They will continuously innovate and work on newer technologies, and geographically also they plan to focus on more geographies and expand worldwide. They will focus on offering other portfolio services to their clients and enter new verticals of services like gaming and drones technologies. And the company in the past has also done some projects in partnership with Microsoft which were towards the gaming industry. Over a period of time, it has been seen that the company's share out of their total revenue in digital services is increasing, which is a good sign, as the digital line of services is growing faster than the other services. So the company will benefit in terms of growth. What are the different risks which this company might face? The attrition compared to the other companies, I felt, is slightly higher in this company. So voluntary attrition number I have observed is about 27%, which is on the higher side. So this could be a big risk for the company, as they have to pay higher to their employees to retain them and don't shift to the bigger size companies. Whatever the strategy they have formed newly for the growth may or may not be successfully implemented. That could be a risk. Whatever acquisitions they have done or they plan to do in the near future, if they don't gel well and they don't align well with the present business, then it could be devastating for the company. If the performance is not up to the mark, if they are not able to deliver their contracts well, it could be a risk to the brand image. Cybersecurity risk, which is same for all the companies. Forex risk, as the company gets a lot of revenue from abroad. There could be inconsistency in the performance of the company, as it has been in the past. As the management shows consistent performance, it is difficult to completely accept that there would be consistency. The company will face stringent competition from smaller, equal and larger companies, as there is a lot of competition in this space. And compared to the other companies, the company's margins are weak. So further pressure on the margins may create a lot of pressure on the profitability and cash flow of the company. Now, after understanding the business, the industry, the growth prospects and the risk profile, let's move on to the numbers. Starting with the quarterly result, the revenue was about 1102 crores in Q3 FY22 compared to 934 crores. So in terms of top line, the company has shown decent result. EBITDA went down from 185 to 158 crores. So this is what inconsistency I'm talking about. The profit after tax is 91 crores compared to 138 crores, which has again gone down compared to the last year. EBITDA margins have gone down from 20% to 14%, and profit after tax margins have gone down from 14.7% to 8.25%. So like this, there are inconsistencies in the performance up till now. Now let's compare the yearly numbers. I've taken the TTM figure also because we are already 3 quarters past in the FY22. So from FY18 to TTM, we compare, the revenue has been more or less constant. We can't see a drastic growth in the revenue it is kind of a stagnant trend. EBITDA, if you see, is on an uptrend, which has improved from about 365 crores in FY18 to about 664 crores in the trailing 12 months. It will be keen to see whether the EBITDA stabilizes at the current level, or along with the revenue, the EBITDA margins are also maintained or are growing. EBITDA margins are somewhere constant, somewhere around 7 to 18%. Compared to the industry peers, they are on the lower side. Profit after tax has improved from about 242 crores in FY18 to about 375 crores in trailing 12 months. We have to keenly observe whether the profitability is maintained or not. Profit after tax margins have improved from somewhere around 7% to 9.5%, but still compared to the other peers, they are on the lower side. Coming to the balance sheet items, the equity is constant. The reserves are steadily growing from 1600 crores to about 2448 crores in FY21 September quarter. The borrowings have been somewhere around 300 crores, but as per the management update, the company has become debt free. The trade receivables are fairly constant. There's no abnormal rise in trade receivables. They have about 700 crores of trade receivables as on September 21. The debtor days have gone down, which is a good sign, from 81 days in FY19 to about 57 days in the trailing 12 months. Cash equivalents are improving steadily. They have about 800 crores of cash as on September 21. A part of it might have utilized in the last few months for the repayment of debt. The operating cash flows have always been positive, which is good, and they have generated about 858 crores of operating cash flows in FY21. Free cash flows have also been positive every year, and they have generated about 800 crores of free cash flows in FY21. So the liquidity position of the company is quite strong. The ROCE is decent. They have generated about 22% of ROCE in FY21. And the ROE is somewhere around 15%, which is also a decent figure. Dividend yields is around 1%, and the auditor is one of the big four companies, which is Deloitte Haskins and Sells. So overall, fundamentally, you can say it is more than average in terms of fundamentals, but performance-wise, there are inconsistencies, and if the company is able to maintain their growth for the next, let's say, 4 to 8 quarters, then the shareholders will get a lot of more confidence on the company. Let's talk about the shareholding pattern. The FIIs hold about 18% in the company and DI is about 14%, public around 19%, and the promoters hold about 49%. So it's a decent shareholding pattern where institutional confidence is also there in the company. Let's talk about the valuations part. The last traded price was somewhere around 377. 52-week high and low is 255 to 587. In the last 1 year, the stock has given 28% return. In the last 3 years, CAGR is about 18% and 5 years CAGR is 16%. So it has done decently well for its shareholders in the last 3 years. The market cap is somewhere around 8,500 crores and it's a face value 2 share. EPS is about 16 rupees and the PE ratio is somewhere around 22. So it appears to be cheaper when compared to its peers. But given the inconsistency in the performance of the company has always been given a lower PE compared to its peers. Industry's PE somewhere is around 29. As post-COVID, the IT companies have been doing well. They are giving strong outlook and numbers. So the sector valuation is quite re-rated and they are being accepted and given higher PE ratios. 5 years median PE is somewhere around 18 for this company. So it's slightly on the higher side, the present valuation. The book value is about 110. So this brings the PB ratio to somewhere around 3.42 and market cap to sales is somewhere around 2x, which is quite reasonable. If we see the chart, the stock price can take support somewhere around 333 levels as well as somewhere around 270. So if you are quite convinced of investing in the company and you are quite positive that the new management will take up the growth quite well and they will maintain consistency, you can start accumulating the stock for somewhere around 333 levels. But if you are a little skeptical, then you can wait for some more correction so that the valuations are more in your favor. The risk reward ratio is more in your favor and you can start accumulating at somewhere around 270 rupees. So this is about Zensar Technologies. I hope you like the analysis. To conclude, let me summarize. It's a RPG group company which gives it an advantage of the strong parentage. The company has changed its management and leadership, identity and strategy, and they expect the company to do a turnaround story. The company is stable in terms of fundamentals as well as liquidity, and it has a good potential to scale their business from the current levels if the new management team does well and their strategy is well implemented. They are focusing on emerging technologies like gaming and drone technologies. They are also open to inorganic expansion by acquiring new companies across the different geographies. But in terms of growth in the past, there has been inconsistency. So this has to be keenly watched going further, quarter after quarter. If you are an investor in the company is also underperforming its peer companies. So you have to gradually see whether the company is able to match their speed of growth or whether the company is continuing to lose the market share. In terms of fundamentals, they have a kind of average or above average fundamentals, but they are not excellent. Competition wise, the company will face stringent competition from its peers, but in terms of valuation, although it appears cheap, but given the inconsistency in the performance in the past, the valuations appear to be slightly on the higher side. And if you can get in at a lower level where your risk reward ratio is a lot more favorable in your end with a limited size of investment, and later you can accumulate the stock based on the consistency in the performance you see quarter on quarter. So instead of just believing the words of the management that it can bring a turnaround, it's better you watch every quarter and slowly accumulate this stock. That could be a wiser strategy for the company. So this is not an investment advice. I hope you do your own analysis and consult your advisor before taking an investment decision. So this is about Zensar Technologies. I hope you like the video. If you like it, hit the like button and subscribe to the channel. If you want me to analyze your favorite companies, don't forget to mention the name of the company in the comments below. I will surely consider it for my upcoming videos. Thank you for watching and have a wonderful day.